I think 2014 will be a very difficult year as the economic compression, or we call it economic winter, is accelerating, and that means we're going to have very soft economies globally, and governments globally will compensate by creating stimulus, and in most countries will be monetary stimulus because fiscal will not be possible. In some countries in the East, maybe fiscal stimulus will be there, but overall it will be monetary stimulus. Look, I think if you look at valuation, there's not really a cheap market anywhere in the world anymore. You're trading actually already pretty high. So then the question is money flows, and I think there are still a lot of people who are sitting on the sidelines. They've got a huge bond portfolio which matures. The total pie is about $220 trillion. About $60 trillion of that is maturing each year, so if 10% of that needs a new home, that's $6 trillion. If that flows into equities, that's 10% of your equity market. You could actually increase the bubble even further. And the main beneficiary of a shift like that would be the biggest debted nations, because that's where the debt is maturing. So you actually look at money flow probably out of US debt into US equity. That might mean your bubble on equity could have a P expansion from 18 to maybe 35 or 40 or whatever number you choose. Preferably, I would like to see that coming together with a currency devaluation. That would make the most sense. But we'll have to see if the dollar index is holding the 78.5. If you look, commodities had a pretty bad year with the exception of crude. What we have on the energy side is that energy self-sufficiency for governments is one of the key factors on the geopolitical landscape. The US model of becoming independent requires $80 oil, otherwise you're fracking, and most of the shale issues are not going to be feasible as the decline ratios accelerate. So I would expect the bottom in oil be somewhere around 75, 80. The upside is going to be driven by monetary issues, not by demand. Supply will stay reasonably flattish. I don't think we're going to have huge supply growth. So we have a reasonable balanced market which will swing. Maybe early year we might have a deflationary impact where we see lower levels, and then through the monetary aggregate increase, probably higher levels again going into 2015-16.